Hello, I'm Anna Kasatkina. You're about to watch the weekly stocks market review. Last week was marked by a huge drop of indices on Wall Street from the year beginning. It happened after publication of negative statistics from China and the Spanish bonds yield rising. Even favorable reports from Google, JP Morgan, Chase and Wells Fargo didn't save the situation. Dow Jones Industrial Average leveled down by 136.99 points, or by 1.1%, and closed at 12,849.59 points, reducing by 1.6% from the previous week closing. This is the sharpest weekly downturn from the mid-December. Standard & Poor's 500 decreased by 17.31 points, or 1.3%, to the mark of 1,370 points. For a week, S&P had narrowed by 2%. Among its components, the financial and technological sectors dropped most significantly. Public facilities and consumption were among the growth leaders. A high technological Nasdaq fell by 44.22 points, or 1.5%, to 311 points, having cut 2.3% of its price in a week. The market showed a slump after the Chinese economy had slackened deeper than expected. The economic upsweep of China slid down to 8.1% in the first quarter from 8.9% in the previous period. The sentiments were also pressurized by the upgoing cost of Spanish papers. The indices drop accelerated after the U.S. Consumer Sentiment Report. The preliminary Consumer Sentiment Index of Reuters and Michigan University reached 75.7 points in April versus the final March value of 76.2. Aside from that, the U.S. inflation lowered the pace in March. The Consumer Price Index elevated by 0.3% after rising by 0.4% a month before. On Friday, JP Morgan Chase declared better quarterly results than calculated, although the net profit of the biggest U.S. bank contracted by 3.1%. Its shares cheapened by 3.6% on Friday. The bank raised the dividends and announced the asset purchase program expansion by $15 billion. The profit of Wells Fargo in the first quarter boosted by 13% to the mark of $4.25 billion, or 75 cents per share, with a yield rate of 6.4%, fixing at $21.64 billion due to the bank's mortgage department. Nevertheless, the bank papers have shrunk by 3.5%. The quotes of Google cheapened by 4.1% and closed at $624.6 per share, recording the sharpest fall since January this year. The profit and earnings of the internet giant turned to be above the forecast for the first quarter, and the average rate for advertisement clicks didn't meet expectations. On Thursday, the company voiced its idea to establish a new type of share without a voting right. The corporation head Larry Page described the new product as a stock split with 2-to-1 ratio. This was the weekly stocks market review prepared for you by our InstaForex team. Goodbye.